Good morning, everyone. It is 10 o'clock, and we'll call the meeting of the Oklahoma City Employee Retirement System to order. Our first order of business is to approve the minutes of the meeting of August 11th, 2016. A motion and a second. All in favor? Aye. All opposed? Motion carries. Item 3 is the consent docket. We have one item. A motion and a second. All in favor? Aye. All opposed? Motion carries. Item 4 is to ratify approvals. We have two items. Second. A motion and a second on item 4. All in favor? Aye. All opposed? Motion carries. Item 5 is to approve the claims docket. Second. Have a motion and a second. All in favor? Aye. All opposed? Motion carries. Item 6 is to approve the following application for service retirements. We have 6 applications this month. Have a motion and a second on item 6. All in favor? All opposed? Motion carries. Item 7 is to receive the report of death and authorize the payment of $5,000 death benefit and approve continuation of the pension to the spouse. We have 3 cases. Motion and a second on item 7. All in favor? Aye. All opposed? Motion carries. Item 8 is to receive the report of death of employee while in active service, and approve the pension to the spouse. We have 1 case. We have a motion and a second. All in favor? Aye. All opposed? Motion carries. Item 9 is to approve the following application for vested rights. We have 2 applications. We have a motion and a second on item 9. All in favor? All opposed? Motion carries. Item 10 is to receive a presentation from Brian Ashley or his representative concerning his application for a disability not in the line of duty allowance as permitted under disability allowance of provision section 4106 of the Oklahoma City Municipal Code. Renee has requested that Wiley is not going to be here, and she has requested that we move this item to the October docket. So I'll need a motion to move that item. I have a motion and a second to move item 10 to the October agenda. All in favor? Aye. All opposed? Motion carries. Item 11, investment consultant report. Jason.
I'm standing in between a 3-minute meeting and a 10-minute meeting. I'll be quick. So you have the flash report in front of you. August was a pretty good month, so bounce back in the markets. One thing you'll note, so absolute returns are certainly higher year to date than they were if we went back to the end of June. It's interesting as we look at some pension plans, depending on when your fiscal year is. Some plans that have a June fiscal year aren't going to be very happy. If you had a September fiscal year, or hopefully even December, it'll look a lot better. A month or 2 makes a big difference. That said, really what's been driving the markets over the last month or 2 is not necessarily fundamentals. There's been a massive shift toward yield-seeking investments. So as interest rates continue to go lower, while that's pushing up bond prices, certainly not based on fundamentals, having that interest rate sensitivity has been a positive. On the fixed income side, high yield has done very well. We've seen about a 14% year-to-date return from high yield as investors are seeking that income component. But then on the equity side, there's really been a search for this yield, and it's driven prices up. Prior to August, we saw a pullback in August in the telecom and utilities and REITs sectors, which don't make up a large portion of the equity markets, and from an active fundamental-based manager, pretty significant underweights across active managers to those sectors as they've just been pushed up as investors are buying those, seeking that yield. Prices have gone up, but not necessarily, not based on good fundamentals. So as we look across the board, while absolute returns are good, relative returns from active management have really struggled more recently. If you just turn to the second page of the ASAP, you'll see on the one-year basis, and this is looking at the different composites, the total portfolio, gross of fees up a little over 6% now. I think we were probably closer to 2-3% going back to the end of June, versus the policy index up 8%. So pretty big dispersion there. Most of that is coming on the equity side. Large cap equity, where you are 50% passive and then 50% enhanced with the Intech strategy. The active Intech strategy has lagged more recently. That's more an effect of larger cap doing a little bit better over a one-year period than smaller cap. That strategy tends to be overweight the smaller names in the large cap universe, as they tend to be more volatile. But up almost 11%, whereas the S&P is up 12.5%. Small cap, this has been, again, decent returns from an absolute standpoint, up 7.4%. The benchmark up 8.8%. Big dispersion among growth and value here. Value has really rebounded after having lagged for several years behind growth. Now we've seen value really take off, and some of it is this reach for yield, as some of those sectors tend to be more value-oriented. Financials have turned around a bit as well as energy. So within your small cap or mid cap portfolio, Times Square on a one-year basis up 2%, 2.07%, versus the Russell 2500 growth up 4.6%, whereas Earnest on the value side is up 12.67%, and the benchmark up 12.79%. But you see the dispersion between growth and value, and that's a pretty big turnaround. Longer term, both of those managers since inception well ahead of their primary benchmarks. Hedge funds, both on the equity side and the fixed income side, have been challenging, as you consider we consider those to be the most pure proxy for active management. They are doing a lot of active things. That has been a struggle. Year to date, on a one-year basis, the equity-oriented long-short is down 4%. Much of that has come where they haven't rebounded as much when the markets have been up, not so much in the decline of January and February. And then on the fixed income side, the PAMCO strategy, you just don't have the interest rate sensitivity there. As what's worked on the bond side is having interest rate or duration. As rates have come down and bond prices have gone up, the purpose of that strategy is really to mitigate against low to rising rates, and you haven't had that over the last one-year period. Really, diversification has not helped over the last year. The international, which has been the most challenging part of the markets from an absolute basis. International developed markets are essentially flat on a one-year basis. There, the managers that you have done a really good job of outperforming, and that's come really across the board, more so from the growth side, from Harding Loevner. Harding Loevner is up over 12% versus the benchmark up 3%, the ACWI ex-US, and then Lazard slightly negative for the year, where the benchmark, EFI benchmark, is flat basically for the year. But Harding Loevner done a very nice job there. Your EM, which you've made some changes, has lagged a bit, about 150 basis points, still up almost 11% on a one-year basis, up 10.7, benchmark up 12.25. Much of that is Vontobel prior to the transition, because you didn't bounce. They were much more conservative strategy. It's about what we would expect there over 3 years, and since inception, that emerging markets have been additive relative to the emerging market benchmark. Year to date, emerging markets are the best performing strategy. This is through the end of August. Through yesterday, emerging markets are up about 19%. And your new manager, Wells Capital, while you're not participating in that because it's not been funded yet, they've had a really good year. They're up about 20% year to date. Real assets, which is primarily real estate, and then the commodities has been additive over the past year, up almost 5%. Pulled down a bit by the commodities. The real estate component has done well. The Morgan Stanley Fund up 12.6% on a trailing one-year basis. So, and the opportunistic real estate, which is the private real estate strategies, which includes the TA real estate fund, that's been up over 12% as well. So really good performance from the real estate. So all in all, things have certainly turned around over the last couple months as we're looking at trailing one-year returns are becoming more positive. 3- and 5-year returns still tracking over 7.5%, and over 5 years over 8.5%, despite the recent downturns. But no manager issues at this time. The only issue is still the funding of the Wells Capital strategy that you selected last month, and I think that's in process. Correct. Yes. Okay. So hopefully we'll get that funded at the beginning of the month, and that will come from the SSGA Emerging Market Index, which has been the proxy for that EM exposure. That's all I have.
Any questions for Jason?
Thank you.
Have you got any responses back to the RFI from last month?
Yes, we have. So we sent out RFIs to custodian banks. The universe there is much smaller. So we got responses back from 4 firms: Northern Trust, Comerica, 3 firms, I'm sorry, and Bank of New York Mellon. We've provided that analysis to staff, and we'll proceed from there. I think the plan will probably be to staff to interview a couple of those candidate firms. So we're pleased with who responded. One State Street did not respond. That was one that we did send the RFI to. We actually did not expect them to. They've made a decision to pursue only larger pieces of business, like the multi-billion-dollar plans, and so they're not. We did not expect them to pursue this.
Any other questions? Thank you, sir.
Thank you.
Do we want to revisit item 10 now that Wiley's here, or do we still want to do it? Okay. How do we do that, Francis?
Ask for a motion to reconsider and rescind the previous action.
I'll entertain a motion to reconsider and rescind the previous action on item 10.
Motion as requested.
Second.
All in favor? All opposed? Motion carries. On item 10, what's the pleasure of the board? Do we need to go into executive session on this, or yes? Thank you very much. So we have
Need a motion, and then I'll do roll
motion to enter into executive session on item number 10. The motion is second. All in favor? All opposed?
So I have to
You
do
do roll call, that's right.
Diana Berry? Yes. Craig Freeman?
Yes.
Carla Nichols? Yes. Dennis Spencer? Regina Story? Yes. Randy Thurman?
Yes.
Jim Williamson? Yes. Paul Bronson?
Yes. Okay, we are back from executive session, and I will entertain a motion on item 10.
Mr. Chair, I move that we defer item 10 to get additional medical information so the board can make a decision.
A motion and a second on item 10. All in favor? All opposed? Motion 10 carries. Item number 12 is comments from board staff and citizens. Just a reminder that the Public Funds Trustee Conference is later this month in Tulsa. I don't know who all has signed up to attend, and is there still time, Renee, if somebody wants to go? Accommodate, okay. Any other comments? Hearing none, we are adjourned at 10:43. Thank you.